Cash is the lifeline of any and every business. Without cash, they cannot pay their employees. They cannot pay their suppliers. They cannot pay their rent or make their loan payments. If they can't pay all these things, very quickly they're going to run out of business. Or they might be forced to sell off assets that may be vital to the survival of their business. So cash is clearly very, very important to a business. Thankfully for us investors, there is a document called the cash flow statement, which shows us the inflows and outflows of cash through a business. And this document gives us a sense of how well a company is managing its cash. Now, how this statement works is pretty similar to your typical bank account statement. At the end of the month, you can see how much money came in and how much money went out of your bank account. So at the end of the month, if there's more cash than at the beginning, then you know that more money came in than what went out of your bank account, and that means that you have a positive cash flow. And if the opposite is true, that means you have negative cash flow for that month. Alright, so cash flow statements typically are divided into three parts: operating cash flow, financing cash flow, and investing cash flow. Under operating cash flow, we see the movement of cash that the company either used or generated from its primary business. So if the company made sales, or if the company paid their employees, or if they spent money to buy some inventories, all these things will appear in operating cash flow. So for a healthy, strong business, we want to see that the cash flow from operations is positive, and that means that the primary business at the company is generating more money than the money that it is spending. Under the second category, investing cash flow, we see the cash that the company either used or generated from making investments. So these are things like if they were to spend money to buy new machines or to upgrade their existing machines, capital expenditures. Or if they were to sell some assets, so let's say they sold a building or they sold some vehicles and then they received cash in exchange for selling those things. So this number may either be positive or negative, but that does not necessarily mean a good or bad thing. The third category is the cash flows from financing activities, and this is related to the company's fundraising efforts. So this number can also be positive or negative, and that not necessarily is a good or bad thing. If this number is positive, it means that during this period, the company received a cash injection. Maybe this company has taken on a new loan, or perhaps they've raised some capital by selling new shares. And if this number is negative, it just means that there was a cash outflow from the company. So either they paid off some of their loans, or they paid out some dividends, or maybe they used their cash reserves to buy back shares. Alright, so for starters, if you're just starting out investing, you're just starting out trying to understand the financial statements, you can just focus primarily on the operating component first, because this tells you from a very, very basic perspective whether this business is a good business. A good business is a good, healthy business. You want to see operating cash flow is positive and growing over the years. That would suggest to us that the business is healthy, is able to generate money, is able to pay its bills. Alright, so as usual, now we're going to take a look at a real example of a cash flow statement so that we can see what it looks like and we can understand how to read it. Today, we're going to look at the cash flow statement for US Steel. We can get this information for free on Yahoo Finance. You just come over to Financials and go to the cash flow statement. First up, what we notice, all the numbers are in thousands, and US Steel has a December year end. So we see the cash flow statement is broken down into three sections: operating, investing, and financing cash flow. Positive numbers are cash inflows to the company, and negative numbers are cash outflows from the company. We can go further in to see the breakdowns of each item. So we see operating cash flows are basically cash from operating the business. This company has positive operating cash flow, so this business is generating money. Next up, we see the investing cash flow, which is related to capital expenditures, investments that the company is making. We see that they have made some capital expenditure in the past 12 months. The last item being the financing cash flow, we see cash that the company uses in its fundraising activities. So under debt, we see a negative cash flow, which means that the company has been paying off some of its debt. Under common stock issuance, we see negative numbers in the past 12 months, which means they have been buying back some of their shares. They have not been paying dividends for some time. At the bottom, I'd like to draw your attention to this item called the free cash flow. So the equation for free cash flow basically is operating cash flow minus capital expenditures. And in this example, we're looking at the difference between this number here for operating cash flow and this number here for capital expenditure. And that's how we get this $3.6 billion figure. What free cash flow tells us is how much the business has generated after taking into account its operating costs and the cost of maintaining its assets. For a good, healthy business, what we want to see is that this number is positive and that this number is growing over the years. And this suggests to us is that this company, this business, is very efficient at how it manages its cash flow. Now, one thing to note is that companies in different industries may exhibit different kinds of cash flow characteristics, depending on the kind of business that it is in. We will cover more of these individual characteristics in other videos as we go along. Alright, so I hope you got a better understanding of how to read a cash flow statement. Like, comment, subscribe if you found this video to be helpful, and I will see you in the next one.